Hey Forex traders, this is Scott Barkley over at Forex Traders, and I just want to do a short video on 3 essential factors that you need to master to help your trading out. Okay, so when here at Forex Traders, we never ever go into the charts looking for a trade. Never. All right. You say, well, isn't that the point? You go into the charts looking for a trade. No, that's not what we do. All right. We go in the market looking for the structure of the market. When we understand the structure of the market, it will tell us where the next probable move is. Okay. Now, we only want to take high probability with low risk. Okay. So once we know where the next probability is, then we can assess the risk for reward. Right. Now, that's not what most traders do. Most traders, retail traders, are trading an indicator, or this indicator, or a combination of indicators, or 25 indicators, or slow stochastics at 80% oversold, or moving average, all that stuff right there. See, that's not what traders do. Retail traders make trading way more difficult than it is. They're trading a myriad of indicators, looking for something to help them figure out, should I get in a trade or not? Well, because most of all, they're focused on trying to find a trade, which is absolutely the worst thing you can do. Yes, you've got to trade to make money. There's no doubt about it. But what you want to do is cherry pick the trade, all right? So I'm illustrating this as a platform diver taking off, all right? A platform diver, and I'm going to use the trading terms. I'm going to do a counter trend B wave with a Gartley and who needs a break hook and go at the beginning, all right? So they've already made the trade hard because they've made it difficult. What you want to do is keep it simple and successful. It's the KISS principle, all right? So if you don't do that, by the way, you most likely will miss the pool and end up in the concrete instead. So we at Pro Traders look for structure first, and then we look for the simplest trade, not the most extensive trade. We're not trying to find something fancy. We're trying to find a very logical, sensible trade based on the structure of the currency. All right. So we call it the view from the helicopter here. So I'm going to illustrate this. This is you as a trader right here. If you're down here like on a 5 or a 10-minute chart, and that's where you're trading, you can't see all this stuff up here. There's a drawbridge up here, there's a bend in the river, there's islands that got to be navigated here, all that stuff. Okay, you can't see that from here because it's all hidden from view. But up here at the helicopter, we can see it all. Because we're up on a 240 chart, we can see the whole structure of the river, all the barriers and turns and channels and things that might be inside that. So that's an illustration of what we'll want to do, is kind of get it in your head. All right. So I'm going to go here in the pound Aussie. I'm going up to a 240-minute chart. All right. And the view from the helicopter is from a 240-minute and occasionally a day chart, but most of the time it's a 240-minute chart. Why do we want to trade a 240-minute chart? Because the big boys trade a 240-minute chart and they enter and exit on a 60. That's why. What does a retail trader do? He's down there on a 5-minute chart on MT4, and that's absolute trading suicide. The view from the helicopter on this chart tells us that we're doing a sideways move. All right. Now, once the market goes into a sideways move, it moves up to the top, it moves down to the bottom, moves up to the top. Okay, structure says the next probable move is to the downside if they're not going to break this and trend. All right, so that's the whole key. We wait until they prove to us they're no longer going to trend. All right, and then we know to trade the downside. So structure of the currency has led us to the next probable move. All right, so I'm going to take it down a little lower now. I'm going down to the 10-minute chart. This is the same move here, and down here in the 10-minute chart I can see here that they have created an A, B, C up to the top. Right now they've also created a nice little channel right here, and I can see that if I could break this channel, which is the next probable move, my reward opportunity is right here. Now, they've proven to me that they're not going to trend. How did they do that? Because they put in lower highs, all right? Lower highs. All right, so if I get the break here, a break hook and go to the downside, this is my risk. 5 to 7 pips above that resistance right there, my risk is minuscule in comparison to my potential reward. This is a 2-part trade. The first part is above the fib right here, and the second part is below the fib. Very simple trade, no indicator needed, no moving average crossover, no none of that. Okay, that's it. And by the way, we did trade this live, and there's the result of that. Now, why did that happen? Well, because market makers create a market and put patterns and things in the market so that professional traders all know what to do. All right. Professional traders know how to read the market, and they trade the market. They're not trading some moving average crossover or something like that. They're trading the market, right? So a trader needs to learn these three essential things: structure, probability, and then define the risk and reward. And if the risk is lower than the reward, then the chart says you should take the trade. Let's take a look at another one here. All right, this is the dollar yen. All right, so the dollar yen is here, and I'm up here on a 240-minute chart. Okay, now this is the first time they've been able to trend all summer. They were in a sideways move over here for a long time, and finally here they proved, all right, we're going to try to trend. All right, so how do they do that? Well, they do an A, B, C retracement down here and bounce it. All right, so up they go. All right, now this is the fourth resistance in the third wave of an Elliott wave. All right. And inside here, the market is fractal. This is one big wave on Elliott and up in the 240 day chart world. But in our world, it is a 5-wave. 1, 2, 3, 4, 5. All right. So structure tells us we're at the end of 5 waves in Elliott wave, in a big wave, the third wave right here, and the most probable move, if they don't break to the upside and continue on up, the most probable move is a pullback to do a 4th wave and then do the 5th wave. Right? That's structure. Okay, so structure has told us that the highest probability is that the move will go to the downside. Right? Now, advanced traders can trade that both ways. Newbies have to wait for it. But okay, so here's what it did. Right? Now, why did it do that? Well, because it has to do that, or otherwise the structure is not there for professional traders to trade it. Right? The market makers all produce patterns and structure in the market so that professional traders know how to do that. All right. Okay. So these are the top 10 tier 1 bankers in the world in the Forex market. You can see that Citibank and Deutsche Bank right here are the two largest banks. They control over 30% of the market. Now these 10 bankers here are only 5% of the market, but they control 92% of the volume. So what does that mean? 92% of everything you see on a chart is created by these 10 guys. Now, once they build a structure that the market understands, we would get follow through from the 500 to 800 banks, the sovereigns, and the hedge funds who are waiting for the big boys to set a structure in a market so they know the next probable move. All right? Then they make a decision based on risk and reward. Just exactly what we're trying to get through in this video. All right? So there you go. That's how it works. Okay? So hope this helps you. We'd love to have you come over and take a demo at our website, www.proacttraders.com. Come over and you can get a 1-day pass and come in for free in a live room. Or you can take 10 days, take a free demo and take 10 days and come in a live room. Watch those traders get hundreds and hundreds and hundreds of pips doing exactly what I just showed you right here. All right? So hope that helps you. Talk to you soon.